What's going on, everyone? I hope you all enjoyed your weekend, and it is now about that time to jump right back into the market. So on Friday, the S&P 500 popped up in a pretty nice way with around 75% of stocks in the S&P 500 closing in the green. And looking at the markets for this week, we have some pretty big updates with the Oracle of Omaha, Warren Buffett, starting to sell some of his Apple position. On top of that, we have some more exciting earnings for the week, and we have some pretty good setups brewing behind the scenes. So stick with us all the way until the end. And besides that, Tom, let's jump right into it.
Yeah, the market was pretty crazy Friday. We jumped up a ton in pre-market on the non-farm payrolls data that came out, and it actually showed that the jobs market was contracting a little bit, Mike. But hey, as we know, the Federal Reserve and the traders in general, they want to see that contraction right now. So that was actually good for the market because it kind of pushes the Feds more towards rate cuts. So we saw the market really pop off, ran up to 512, broke out, and even held above there into close. So I'm really going to be watching the market going into Monday morning here, Mike. It's holding up very well, and there could be some good movements, especially if we see some good pre-market movement come in here. But the big news that came out over this weekend was Berkshire Hathaway's shareholder meeting. And Mike, the shareholder meetings are always awesome. Warren Buffett talks. Usually Charlie Munger talks at these events too, but of course he wasn't able to make it as he did pass away earlier this year. And even Warren Buffett kind of made some hints at his own mortality, saying he doesn't know if he'll be there next year. And I don't know, Mike, it's a little sad whenever you see these meetings, but then again, to get the wisdom from such a key powerhouse in the stock market, it's always good to see. And one interesting thing that I saw is just really the amount of shares that they're selling with Apple. That's really been the talk of the market here. They're cutting their investment by about 13%. That's pretty big. Although Buffett did hint it could be for tax reasons. And hey, leave it up to the big dog to try to play taxes, right?
Yeah, it's sad to see Warren Buffett and Charlie Munger get old like this, but they sure had a great run. And as you already mentioned, they did start to sell some of their Apple position, but it was more for like a tax reason, like you said. But either way, I did want to mention that because it's not too often that you see, Berkshire selling 13% of their Apple position. So either way, keep a close eye on Apple. They had a nice run on Friday from their earnings report and their mega $110 billion share buyback. And we really haven't seen Apple move up in a momentum-filled way over the past couple of years like we have with some other big tech stocks like Nvidia, Meta, Microsoft, and others. So maybe this could be the start of something special with Apple because it has been kind of stuck in the mud for like the past couple of years. But another thing that I thought was pretty interesting from this weekend's investor conference with Berkshire Hathaway was the fact that they took a pretty big L on their Paramount position. So, Tom, fill us in there.
Yeah, it's pretty big. Warren Buffett said that they lost quite a bit of money on this Paramount position, so they sold the entire thing off at a loss. I'm not sure how much they ended up actually losing on this. Of course, we'll maybe find out as things start to become public a little bit more. But he did say that he was 100% responsible for the Paramount decision. And guys, I really wanted to emphasize this, that not even Warren Buffett, not even the king, the Oracle of Omaha, can win every single investment or every single trade, right? Like he says here, they lost quite a bit of money. It was 100% his own fault. But let's be real. At the end of the day, the Apple positions make up for it. The oil positions have been doing well. So, we've been seeing a lot of other positivity out of his portfolio, but it's a big thing, right? I know a lot of traders out there. It's very difficult for them to take, even within 1 week, just a couple of losses. Guys, a couple of losses happen now and again, even to the big dogs out there. So I thought this was very interesting, Mike. But at the end of the day, I also thought it was interesting because when I go to Paramount's chart, I'm like, wow, hey, Paramount's down around daily, it's down around big support. I'm surprised that they're selling out right now. But then again, we never know how Berkshire is going to deploy that capital. They could do so many different things with it.
I think the biggest takeaway is that even the smartest, richest, best investors of all time have losing trades too. So, keep that in mind. Sometimes losing is a part of the process, but as long as you can act in a rational and smart way over time, the winners should make up for the losers. But good stuff there, Tom. And while we had a whole tsunami of big tech earnings last week, we still do have a couple exciting reports this week, but it's just for some, I guess you could say, other stocks like Palantir after close on Monday. We have Disney before the bell on Tuesday, Uber and Shopify before the bell on Wednesday, ARM, Robinhood, and Airbnb after the bell on Wednesday, and a couple other ones scattered throughout the week. But I figured I'd bring this up because, earnings season is slowing down a little bit, but we still have a couple exciting reports.
Yeah, we really do. And some of these companies are some of, I would say, traders' favorite stocks out there, like Lucid on Monday and after hours is going to be huge for traders. Rivian Tuesday and after hours. And trust me, guys, I don't love these companies. So, don't shoot the messenger here, but I just am saying they're going to be big reports. A lot of people will probably be watching them. Even Oxy reporting Tuesday and after hours. Ferrari, some more notable ones probably with better stock movement would be like WBD, Warner Bros. Thursday. There's just a lot of little ones mixed in. It's not like we're seeing Apple and Meta and Tesla anymore. But I will say, like, Disney's going to be my favorite of the week, Mike. I don't know what your favorite is, but Disney's definitely going to be mine. They've been having a lot of issues lately. If they could start to get out of this, like, $100 to $113 range, I would love to see it. So they could have a good report. But which ones are you looking at? Or, like, what's your favorite?
I'll definitely have to go with Palantir after the bell on Monday. This stock has been doing pretty well over like the past year or so. And it's like at a point right now where it's still elevated, but it's not like towards its highs of around like $27 a share. I really like this company for the long term, but as we all know, earnings are pretty crazy, and I'm just excited to see like how they're continuing to develop and to see what some of their earnings and revenue growth looks like.
Yeah, so Mike, you're not saying to go into calls or anything because you like it, right?
Yes, definitely not do that. That's gambling for sure. But I will definitely be excited to see how the earnings look, which I guess is a much more boring answer, but it is what it is. But speaking of earnings, though, while we do have a lot of the big tech stocks out of the way, I think it's worth noting that the market has held up in a pretty strong way throughout this earnings season. It started out looking a little bit scary with some of the stocks like Netflix making like a decent move lower, but with everything being said, stocks held up in a pretty good way this earnings season, and as we saw from SPY last week, the market is holding pretty strong, so that's always a really good sign because earnings season presents like this unique risk where like things can get really badly really quickly, just like we saw a couple years ago with like when Netflix and Meta gapped down. But this is a good sign for the market because earnings season does mean a lot.
It really does, and I'm hoping that the rest of the earnings season goes as well as it has so far. I'm not going to say it's been the best because, like, the SPY has been pulling back, but like you said, it's been staying pretty stagnant. I would say the big things I'm more worried about here in the short term are inflation, right? I know that the earnings are very, very important, of course, as we always know. But, of course, as we saw in pre-market on Friday with the big move with SPY, the unemployment data and that type of data matters a ton to traders. And the weird thing is, Mike, is this week we actually don't have too much on the radar either. So that'll let us really focus on the overall price action with the market, maybe just some of the earnings, which could be a better thing. At the end of the day, I'd rather just focus on the price action. And with these stocks holding up high heading into Monday, it's hard not to look at them up, right? Especially when you see Apple still holding up so high from their earnings. Like if we could see a nice rebreak around 187 there, or we see some bullishness again out of Microsoft, it could make for a really good open tomorrow.
I do like the fact that the economic schedule is pretty dead this week because it can just let you trade normal price action without having to worry about, what Powell's going to say or how Apple's going to report earnings or anything like that. So I'm definitely looking forward to that this week. And as we look closer at SPY, what would you say are like the main levels to watch for the week?
Yeah, so last week, the big spot was that 510 resistance, and we really failed to break out of there. Besides on Friday, it broke for a little bit right above that 510 resistance, and then finally ran up to like 512, right? We finally got that good break. For this week, I'm really watching 514 and 516 overhead. 514 is the next major next resistance that I'm watching for. after that, I have a minor one like around 515 and then 516. To me, though, the big level coming up, like if the SPY were to truly start to gap up, would be around this 519 to 520 area. I'm going to mark it in blue up here at the top. It's a pretty big range, but at the end of the day, there's been a ton of price action, a ton of bounces right around that little $1 range. So if we do see SPY get there, that's going to be major resistance. For support, I'm using 507, which was major from last week, as well as 506, and then down under there, 502, and then 500. Of course, Mike, $500 held up last week. Who would have guessed?
Yeah, it's a giant level, and the fact that it, bounced off that in a pretty strong way does say a lot. So good stuff there, Tom. And let's jump right into some setups and predictions for tomorrow. A stock I'm watching pretty closely right now is Chewy, and it is to the upside. This stock had a decent move towards the end of last week, but it still has a whole lot of work to do if it wants to have a true breakout. But I am liking this strong bounce off this like $15 support area, and assuming the price action stays strong, it does have a lot to gain in the short term. But like I said, it does have a lot more work to do. But either way, I'm watching Chewy to the upside pretty closely for the week. And, the more pressure it puts on the high of day, the better.
Yeah, hopefully Chewy can get going off support. There's been a lot of these growth stocks lately that have been down around major supports, and they've been starting to bounce up pretty well. We've seen Zoom starting to do this as well as a couple others. I know Zoom was down Friday, but still figured I'd mention the overall support bounce there. But with my first play, Mike, I'm actually looking at ticker symbol TSM, pretty big tech stock. They've been starting to break out, and Friday they had a really good breakout of the daily chart. They broke that 140 resistance, and I'll be looking for a pop towards like 143 to 144 come Monday morning. So if this stock can keep going, keep putting good pressure in the high day, have a solid break above like 142.15, then I will eye up those calls. It's been really good to see tech coming back lately, and TSM has been one of the largest risers there, especially at 3.9% on Friday.
All right, good stuff. Another stock I'm watching pretty closely is GDX, and this is basically a bunch of gold miners all in one. These stocks have been doing good over like the past couple of months, but have been consolidating over the past couple of weeks. But either way, it's in a nice uptrend, and gold prices have been staying relatively elevated in the grand scheme of things. I know they're pulling back a little bit off their recent highs, but that definitely helps gold miners nonetheless. So either way, I am looking at GDX to the upside in the short term. I really wouldn't be too concerned about this one unless it broke below like that $32.50 area. But as long as it holds above that support, I can see it making a nice move higher. And I'll also say that GDX is not like some, it doesn't move like some like tech or AI company. It moves in a slower and more consistent way just due to the nature that it follows gold mining stocks rather than some hyped up AI company.
Yeah, exactly. It's no GameStop, which actually I'll give GameStop a quick mention, Mike. It was up 29% Friday. There was no news with this. We were actually scouring everywhere for news. If you guys have any big news on GameStop, let me know in the comments. I'll be interested to see what you guys have for that. With my next stock, I'm looking at SMCI, which was up 2.65% Friday. Had a pretty good move, and it actually ran right into key resistance around $800 and rejected and fell back off. So guess what we're going to do? We're going to go over to the book map. We're going to look at that $800 level. That spot was so major last week. If this stock, SMCI, can break 800 with some good momentum, I will look for a decent push higher to around 810 or even more. This stock should get a decent move if that does actually truly break. But that's just such a big level, Mike, whether you're looking at it because it's a psychological level, whether you see the proof on the book map and literally see the shares sitting there. I mean, it's just a big level in general, right? It's not just one that's made up either. You can get the x-ray vision on book map and see it sitting right there. So let's go, Mike. $800 will be big for SMCI. Just keep in mind that these tech stocks have been pretty wild lately.
All right, sounds good. Well, let's jump right into today's momentum trades. And with the first one, we have CGC to the upside.
Yeah, the MJ stock started to heat up a little bit midday Friday, then fell back off. If CGC can break back above $10.50, then look at calls.
All right, with the next one, we have Enphase to the upside.
Yeah, Enphase has been wild lately. Go ahead and make them break 117.50, just above the high of day.
All right. And then with the last one, we have TLT for both directions.
TLT, yeah, Old Faithful. Then isn't that what we call it, Mike? Old
Yep.
Faithful.
Yep.
Yeah,
Yep.
yeah, Old Faithful here. So if it breaks above 90.30, then go ahead and look at calls. If it breaks under 89.30, then go ahead and look at puts.
All right, so we have the downside level for puts, and we have the upside level for calls with TLT. Don't forget about the upside levels with Enphase and CGC as well. But either way, these three stocks are on watch for potential day trades to the upside tomorrow, if and only if they break through the levels Tom listed. We are looking for strong, consistent price action with these stocks, and then continuations in the directions listed. But let's also jump right into today's $3.2 million big money trade of the day. And this one is with I guess you could say Intel. And I was going to say I'll say a chip stock that has just been gotten demolished over like the past couple months. Chip stocks have been doing great over like the past year, whether you look at Nvidia, AMD, SMCI, TSM, basically any chip stock out there has been running in a pretty good way. But Intel is one of the chip stocks that is you can definitely not say the same thing about. But either way, the big money put around $3.2 million into the Intel 30 strike call options that expire on August 16th of 2024. And looking at Intel right now, these call options are in the money, which is always good to see. There's a good amount of time to it. The stock is bouncing off of a nice recent support level. And, Tom, there was news of the CEO of Intel actually buying about 8,000 shares of the company just below like $31 per share. So when you see the combination of, you could say, big money buying in the money calls with time, plus the CEO buying shares, plus the stock already reported earnings and is bouncing off a decent support, that's some pretty good news. So definitely keep a close eye on this stock going forward, because even like $3.2 million is like a relatively big money play.
It really is. To see $3.2 million going to these calls is pretty big here. And I know Intel might not be everybody's favorite, especially with the way it's fallen down. Everyone compares it to AMD and everyone's all hyped up about AMD, of course. Same thing with NVIDIA. Although even AMD can't even touch NVIDIA. But, everybody looks at Intel and they're like, well, AMD. But I still like Intel for the long term, Mike. And with it falling a lot recently, I've actually been watching it a lot for shares personally. So I'm really going to watch this by Intel CEO. What is interesting is that this big money play is actually worth more than the shares that the CEO even bought, right? The amount of shares he bought was only like a couple $100,000 or something. This is a $3.2 million big money play off the 30 strike calls. Now, granted, the CEO is just adding to his position, but still, I think it just goes to show the scale of this big money play, right? Like $3.2 million. We're right at support. We got the CEO buying. You almost can't ask for better news in the short term on a big money play. So I really like that support, Mike. And the thing that I like about this is the risk reward. If you play this and you do keep a solid stop loss, like around like 29 or 29.50, and you just play it that way, it should be a pretty good risk-reward ratio for you. Like, you could maybe target like 35, 37, maybe even $40 if it does get enough bullishness, but I could see the stock doing pretty well off this lower support.
Yeah, and with all big money trades, a lot of them require, a decent amount of time. Like, this option has until the middle of August. So it's like, if you're looking to trade Intel to the upside tomorrow, then that is a completely different setup than what the big money trader is playing right here. So, give it the time it needs. But either way, I am excited to see how this one does. But, looking at everything right now, whether it's Intel or even Apple with its recent Berkshire news and its recent earnings and mega share buyback, or even if we look at some of the important earnings for the week, we do have a pretty exciting week on the schedule. I'm happy to say that we don't have to worry about Powell or anything like that, so it should make for a much smoother trading process. So I'm pretty excited, Tom.
Yeah, me too. And, the big thing is a lot of these stocks last week were also closing up around their recent highs, like SPY, Apple, Microsoft, etc. had really good closes Friday. So heading into Monday morning, just keep your eyes on that momentum. If we do see continued breakouts, we could see some pretty good runs here. So I'm definitely going to have my eyes on these very, very closely. I know a lot of people, though, we brought up Apple again and everything. I know a lot of people might look at Berkshire selling Apple, and then they might say like, hey, that's a really bad situation. Just don't forget, he did hint that that could be for tax reasons, guys. I know a lot of people out there are going to say, well, Tom, that's terrible for Apple. Shouldn't we short it this week? Maybe not. They still had good earnings. They're recovering up well. Just because they're selling out a little bit doesn't mean that we should all run towards the exits here.
And for what it's worth, Apple is still Berkshire's largest holding. So if they truly were bearish, I would like to think they would sell more than 13% of their stake. So that's just another thing worth keeping in mind. But another thing I have to bring up is our brand new Stocked Up Deep Value Club. Short-term trading is very exciting and awesome, but if you truly want to be in the market for the long term, you have to know about the fundamental side of the market as well, which deals with companies' profitability, earnings growth, and valuations. Basically, we made the Stocked Up Deep Value Club to explain all of this and everything related to it in a nice and simple way. You get text and email alerts if you sign up, and we made this program affordable for everyone at $30 a month. Every single person who signed up for this has learned quite a bit, and honestly, it is the place to be if you really want to learn about what actually drives stock prices over long periods of time. There is so much great information in this that not only applies to the stock market, but also just business and investing in general. So if this interests you, definitely check out that first link in the description and the comments down below. You will not find anything else out there, even remotely close, that covers the crucial fundamental concepts that drive markets over time. So check it out. But besides that, Tom, let's also give a giant shout out to today's member of the day, G Tiger in the Stocked Up Discord. You're still new to the community, but you had a great day on Friday. A great open as well, as we can see from the screenshot below. So awesome job there, and hopefully we see many more screenshots like this one in the future. But with everything being said, thank you all so much for watching. I'm very happy that Powell's out of the schedule for the week. And we still have a couple exciting earnings, but nothing like too crazy. So we should be in for a nice, smooth week. Besides that, thank you all so much for watching, and let's make this week a great one.